All right, let's do a few more exercises from chapter 1. Number 11 reads, indicate whether each of the following types of transactions will either increase or decrease stockholders' equity. And again, remember, all revenue and expense flows into stockholders' equity. Number 1, issued common stock for cash. Well, there's 3 components to stockholders' equity. The first is the revenue and expense flows into there. The second is if we sell stock, that also is a part of stockholders' equity. And the third is dividends. And an easy way to remember this, and this is something not to get too worked up about with chapter 1 yet, but your retained earnings statement or your stockholders' earnings statement. Stockholders' earnings statement is you got your beginning stockholders' equity, and then to that you add your net income, which is your revenue and expense, less your dividends, gives you your ending stockholders' equity. So you've got 2 of those 3 components there. You've got your net income and your dividends. And then if you sell stock, that also would add to your stockholders' equity. So in number 1, you issued common stock. That's going to add to it. You received cash for services performed. That's revenue. That's an add. You paid expenses. That's a deduction then. That reduces your income. That's a decrease. And then number 4, you paid dividends, of course. That will reduce your stockholders' equity. We'll explain that a whole lot more in future chapters. Number 13, it says here this Terry West operates her own catering service. Summary financial data for July are presented in the equation form as follows. Each line designated by a number indicates the effect of the transaction on the equation. Each increase and decrease in stockholders' equity except for transaction 5 affects net income. All right. Letter A, describe each transaction. So in number 1, there is a plus to cash of $71,800 and fees earned. So what did we do? We produced revenue that supplied cash. We provided services for cash. Number 2, there's a reduction of cash of 15 and land went up by 15. So in this case, what did we do? We used cash to purchase land. Number 3, there's a reduction in cash again of $47,500 and expenses of $47,500. So we used cash to pay expenses, $47,500. Number 4, supplies went up by $1,100 and accounts payable went up by $1,100. So in this case, we purchased supplies on account. We haven't used our cash to pay for them yet. We charged it. Number 5, there's a reduction of cash of $5,000 and dividends of $5,000. So in this case, what did we do? We paid dividends of $5,000. Number 6, payment of $4,000 of cash and accounts payable is reduced by 4. Items that we had once charged and we're going to pay later, we're now paying it. So we are reducing what we owe to others. And then lastly, number 7, $1,500 in supplies is going down and expenses is going down, changing by $1,500. So in this case, what we did is we had supplies that we had in our supply room, say some photocopying paper, and we are now using it. So we reduce our supplies, our asset account, and we are expensing it because we're now using it. Letter B, what is the amount of the net income? Or excuse me, what is the amount of net increase in cash during the month? Well, basically what you can do is look at the beginning cash, which was $40,000, to the ending cash is $40,300. Well, it increased by $300. What is the amount of the net increase in stockholders' equity during the month? Well, in this case, we can look at how much net income did we have? $71,800. How much expense did we have? $49,000. And we just need to remember that's not all of it, just like we have up here. It is net income, and we also must not forget about dividends. So in this case, we take away another $5,000. So the actual net increase in the equity account is $17,800. Letter D, it says, what is the amount of net income? Net income. Well, then all we're looking at is the two $71,800 of revenue and the $49,000 of expense, just like what we have here in letter D. And then letter E, how much of the net income for the month was retained? What was retained? Well, in this case, we've got a total of $22,000 of net income, right? That's revenues less the expenses. And then we gave up another $5,000 for dividends to the owner. So what are we actually retaining? $17,800, just like we answered in letter C. Let's move to number 16. And it says, and 16 and 17 kind of goes together. From the following list of selected items taken from the records of Bobcat Appliance Service as of a specific date, identify those that would appear on the balance sheet, and number 17, on the income statement. So number 1, accounts payable, that's a liability, so that goes on the balance sheet. So what's on the balance sheet? Assets, liabilities, and the stockholders' equity. What's on the income statement? Revenues and expenses. All right, cash, it's an asset, balance sheet. Common stock, that goes in the stockholders' equity, balance sheet. Fees earned, that's revenue, so that's on the income statement. Number 5, land, that's an asset, balance sheet. Rent expense, keyword there, expense is on the income statement. Retained earnings, just like we've done before, that's on the balance sheet because it's in the equity section. Supplies is an asset, balance sheet. Supplies expense, that would be on the income statement. And wages payable, just like accounts payable, it's monies that we owe, a liability on the balance sheet. And then, let's roll to number 22. It says here, each of the following items is shown on the financial statement of Exxon. Identify the financial statement, balance sheet, or income statement in which each of the item would appear. All right, so accounts payable, again, balance sheet, cash equivalents, balance sheet, crude inventory. Keyword there is inventory, balance sheet, equipment, balance sheet. Expenses, number 5, income statement. Payable, number 6, liability on the balance sheet. Number 7, investments, it's like cash, balance sheet. Number 8, debt, liability, balance sheet. Marketable securities is like an investment, asset, balance sheet. Loans payable, liability, balance sheet. Receivable, somebody owes us money, it's an asset, balance sheet. Operating expenses, income statement. Prepaid taxes, that's a goofy one, prepaid. A prepaid anything, prepaid rent, prepaid taxes, prepaid, anything that's prepaid is an asset. It's something just to remember. There was a handout that I attached to an email sent to you or found on the LMS as listing of all kinds of accounts, and they tell you what, if it's an asset, a liability, equity, revenue or expense, and what statement it goes on there. You'll notice that prepaid is always an asset. Sales, so revenue on the income statement, and then selling expenses, the keyword there, expenses, also an income statement item. Letter B, it says, can an item appear on more than one financial statement? Typically the answer is no, but the answer is actually yes, in the sense that there are items that will be on both the cash flow statement and the balance sheet. Cash is the perfect example. there are never any items that are on both the balance sheet and the income statement. So when I say generally, the answer is no. That's true because we're usually talking about the balance sheet and the income statement. It's one or the other. But when we throw in the statement of cash flows, there are some items there that will appear on both. So it's kind of a tricky question, but typically it's either the balance sheet or the income statement. That's what I would really want you to focus on. And letter C, is the accounting equation relevant? It doesn't matter if it's Exxon or if it's B&G down the street, a multi-billion-dollar company or something significantly smaller. The equation is always the same. Assets equals liabilities plus owner's equity, stockholders' equity, however you want to call it, every time. All right, we'll stop there for a moment.